This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Indonesia's plans to raise the mandatory bio-content in its palm oil-based biodiesel to 40% may face further delays, after the high price of the vegetable oil has made the program too costly, a senior government official told Reuters. Indonesia, the world's largest palm oil producer and exporter, has a mandatory biodiesel program with 30% palm oil content, known as B30, but intends to expand the use of the oil for energy to save on fuel imports. Authorities had planned to increase the mix to 40% in July this year, but the timetable for the B40 program is now unclear.
Crude inventories last week dropped for a third straight week while fuel demand rose to its highest since March 2020, the Energy Information Administration said on Wednesday. Crude inventories fell by 3 million barrels in the week to August 20, slightly higher than analysts' expectations in a Reuters poll for a 2.7 million barrel drop. At 432.6 million barrels, crude stocks were at their lowest since January 2020. After 10 consecutive weekly drawdowns, stocks at the Cushing, Oklahoma, delivery hub for U.S. crude futures rose by 70,000 barrels last week, the AIA said.
Moving on to the top news in the energy sector.
Singapore residual fuel oil inventories fell 4% in the week ended August 25 to a 6-month low amid persistently weak net import volumes, official data showed on Thursday. Onshore fuel oil stocks fell by 889,000 barrels, or about 140,000 tons, to 21.18 million barrels, or 3.34 million tons, their lowest since the week to February 24, Enterprise Singapore data showed. While Singapore's weekly net fuel oil imports were up by 26% from the previous week to 593,000 tons, they were below the 2021 weekly average of 687,000 tons for a fifth straight week. Weekly figures, however, are volatile.
The Cambodian government is seeking the return of an oil tanker and its crew who have been detained in Indonesia, alleging that the ship had loaded oil illegally from an offshore oil field, a government official said on Thursday. The Bahamas-flagged tanker Mount Strovolos and its crew were detained in waters near the Anambas Islands of Indonesia on July 27, the Indonesian Navy said in a statement. The vessel is carrying Cambodia's first-ever oil production from an offshore oil field which began operation in December 2020. However, the cargo has been stuck on board the tanker since May as the project developer Chris Energy entered liquidation in June after being unable to pay debts. Next, we have the top news in metal markets. A prefecture in China's Xinjiang region has imposed output limits on 5 aluminium smelters starting from this month as part of efforts to stamp out illegal production, sending Shanghai aluminium prices to a 13-year high. Across the 5 smelters, the monthly limits represent a 10% reduction in production from output levels in the first 7 months of this year, according to Reuters calculations. Xinjiang is a major smelting hub in China, accounting for almost 1/5 of supply in the world's biggest producer and consumer of aluminium.
4 years from now, fields in the Jada River Valley in western Serbia where George Day Kapitanovic grows corn and soy to feed his cattle will be turned into a waste dump for Europe's biggest lithium mine. Rio Tinto in July committed $2.4 billion to its Jada project as global miners push into metals needed for the green energy transition, including lithium, which is used to make electric vehicle batteries. The Jada project, once completed, would help make Rio a top 10 lithium producer, just as demand for EVs booms. Opposition to the project is growing, however, because of concerns about possible environmental damage and protest rallies have become more frequent.
We will now look at the top news in the agricultural sector.
The International Grains Council, IGC, on Thursday cut its forecast for the 2021-22 global wheat crop, reflecting diminished outlooks for Russia, Canada and the United States. In its monthly update, the intergovernmental body cut its 2021-22 world wheat crop outlook by 6 million tons to 782 million tons. Russia's wheat crop, which has been reduced by hot and dry weather this summer, was seen at 75 million tons, down from a previous forecast of 81 million tons but above this month's U.S. Department of Agriculture's projection of 72.5 million tons.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.